Welcome to the Indicators and Time Frames module. Now, as a trader, there's going to be a bunch of different indicators at your disposal. Time frames. There's a number of different time frames that you can use as you analyze a stock's chart. Let's dive in. Indicators. Indicators are tools a trader uses to conduct technical analysis on a stock's chart. 2. A trader uses technical analysis in order to determine the best entry point before investing into a stock. Number 3. There are many indicators available to a trader, and there's no such thing as the best indicator. That's very important to know. There's no such thing as the best indicator to use. Time frames. Now, as you see on your left hand side, you have a bunch of time frames to use. 1 minute, 3 minute, 5 minute time frame, 1 hour, 2 hour, 3 hour, 4 hour time frame, 1 day, 1 week, 1 month, 3 months. So when I talked about checking out a stock's historical data, you can go back days, months, weeks, minutes. So there are multiple time frames available to you. Okay, and we talk about top-down analysis in the trading world. Top-down analysis is when you start with a larger time frame and then you work your way down as you analyze that stock's chart. So let's say, for example, you're looking at Tesla. You're not going to start at the 5 minute time frame. If you want to analyze Tesla, you may start at the daily time frame, and then next you'll analyze the 4 hour time frame, next the 1 hour time frame, next the 15, and then the 5, and so on. So you're going to start top down analysis when you are looking at a stock's chart. And you see here we have scalp trading, swing trading, and long-term trading. So for scalp trading, when I'm scalping throughout the day, I'm looking at the 1 minute, the 5 minute, the 15, the 1 hour, and the 4 hour. All right, so I'm looking at those each day, and as I'm scalp trading during the market hours, I have my 1 minute and my 5 minute side by side. So let's say I'm looking at SPY. I have my 5 minute here and my 1 minute here, like a split screen. All right, on another monitor, I'll have the 15 minute chart on SPY pulled up as well. Now, when it comes to the 1 hour and the 4 hour, that is what I'm checking out before the market opens. So my pre-market analysis, I'm looking at the 1 hour chart and the 4 hour chart just to see if I can draw any lines, trend lines, support, resistance, supply, demand. We'll get into supply and demand, but that's what I'm doing for the 1 hour and the 4 hour. Now, when you're swing trading, meaning that you're going to hold this trade and stay in it for days, weeks, or months, then the 5 minute and the 1 minute time frame isn't going to be a big deal for you. You're going to want to focus on the 1 day, the weekly, or the monthly time frame if you're going to be holding this trade for days and weeks or months. Long-term trading. All right, so now this is, let's say you want to jump into Apple and you're going to hold Apple for like 6 or 7 months. So you really want to stay in for a long time. Then the 1 minute, 5 minute, 15 minute, 1 hour, 4 hour time frame, there will be no point to analyze those time frames. You're going to look at the daily, weekly, monthly, yearly, and you also can look at the 5-year time frame. Even 10 years back, you can look at a bunch of historical data. So depending on what you're doing will help you choose the proper time frame for analyzing a stock. So it just depends on the situation. All right, so we're gonna go into this next slide here. Now, dream home. We all have an image in our mind of our dream home. You may want a pool in the back, you may want a golf course in the backyard, who knows, but let's just say, just imagine for a second here, You're building your dream home. You didn't hire a lot of builders. You're actually taking part in the process. You're gonna build it. Just you by yourself, right? So let's look here. Check out these tools. Each of these tools are useful, right? All of them you can use at some point as you build this dream home. But every tool here, some tools may not get used, right? Then depending on what you're doing, you're going to use a specific tool. All right? So it just depends on the job that you're doing. That will tell you the tool that you're going to use. Your indicators are going to work in the same way. All right? So when you understand them and you understand when to use them, it'll definitely help you make the right decision when it comes time to make that investment. All right, so again, there's a lot of indicators, but there's no top indicator, there's no best indicator. You just have to know which one to use and when to use it. All right, so I'll be right back. Let's jump into a video. Let's jump into indicators. And now these are the ones that I use each and every day. So you can use these too, and hopefully they'll work for you as well as they've been working for me. So we have moving averages, we have VWAP, we have MACD and RSI, and let's go over each one of these. So we are here on the 5-minute chart. Each candle represents 5 minutes. Now these bars here are volume bars, and each bar is related to the candle above it. All right, so this is all volume. But let's get into moving averages. So basically what they do is over a period of time, they track the price trend of that particular stock. So right here, we're looking at SPY, and this is the 8 moving average, 21 and 200. Now, that period of time is relative to the number, and this number is in days. So this 8 moving average is tracking the price trend of the previous 8 days, and the same goes for the 21 and the 200. So it's good to have these on your chart. I like to use these, everything you see here, I like to use on, so right now I'm on the 5-minute chart, and that's one time frame. But up here you have choices. You have 1 minute, 5 minute, 1 hour, 4 hour, 1 day, and 1 week. And then if you hit this drop down here, by the way, I'm using Tradingview, and I do all of my charting in Tradingview. Whatever you like to use is fine, but this is what I use. And as you can see, you can put in here multiple time frames, many choices. All right, but on the smaller time frames, I like to use the 8, the 21, and the 200. So now, when I'm looking at the price action of the candles throughout the day, the 8 moving average, I'm tracking that because this one is gonna be, I would say, closely related to the price action as far as the candles staying with that the entire time. So if you look at this green line, these up here went above it, came back down, but look here, it stayed along this 8 moving average pretty much for the rest of the trading day. This here is one trading day, from here to here, from open to close. So when I get into a position, let's say I get in right here on this candle, I'll usually stay in the position until it starts to break the 8 moving average. So let's say we get in right here and we ride it on up. Now here it did break through. It broke through here, but it quickly was reclaimed on the next candle and continued upward. So the 8, I'm looking for breaks in the 8, and especially significant breaks, like if this candle goes red and then you get another red candle that pushes through the 8 and the 21, now we may have a reversal in place. All right, so that's what I'm looking at when it comes to this 8 moving average. Now the 21 moving average, a lot of times when it breaks the 8, it'll come and touch the 21, and it will, and it may bounce back up like it did here, and the 8, or it'll reclaim the 8 moving average, or at times you'll get a push through 21. So that's what I'm looking at when it comes to these 2 moving averages. Now the 200 moving average is the strongest moving average because it's representative of the previous 200 days. So as you can see, when price action came down to the 200 moving average, it responded and went back up, came down, broke through briefly, but then quickly was reclaimed and bounced back to the upside. And now also colors, you can choose any color you want for any of these moving averages. These are just the ones that I chose. All right, so again, moving averages, they just allow you to track the price trend over a period of time. And these are what I use on a daily basis. VWAP. Now the VWAP is really good as well, especially for day traders, anyone trading short term. What it does, well, that's what it stands for. Volume weighted average price. That's what VWAP stands for. And basically, VWAP is going to represent the price action throughout a single day's trading session. So it's not like the moving averages where it's going back a certain number of days and tracking that. This is relative to that particular day of trading. All right, so when the price action approaches VWAP, a lot of times it'll react as well. Not as strong as the 200, but relatively strong. And as you can see here, when price action came down to VWAP, this yellow line, it popped back up. But here it actually broke through, came back up, was rejected back down, and then you can see it went back up to it and pushed through. So the 200 moving average and my VWAP are lines that I really keep an eye on, because when the price action approaches either of these two lines, you want to be on the lookout, because things could reverse and you could get a bounce up or down off either one of these two lines. So always be on the lookout. If you're in a position and you see the candle starting to approach, like right here, the candle starts to go down and approach this yellow line, and let's say you're in for putts right here. Let's say you get putts right here on this candle. So you start to make money as the price goes down. Well, when it gets here, you may want to consider closing your position and taking profit. Don't assume that it's going to continue to push through here all the time. So you just want to be on the lookout for that. Same goes true for this 200 moving average. So they're really good for those reasons, and they're a must for me when I day trade. Let's go down here and we can take a look at the MACD. Now the MACD is very helpful, and what that is the moving average convergence divergence indicator. All right, so now take a look at the MACD and take a look at the 8 and the 21 moving average. Do you see a relation? You see how right here, when this 8 moving average crossed below this 21 moving average, the purple line, if we look down here, it happened here a little bit before, but when it happened here a little bit later. And these lines started to diverge. So when you have these lines diverging like this, or at times you'll see even more divergence, that means that whatever trend is in place is likely to continue for a while. So right here, it started to diverge, these two lines, and up here, the price action continued downward, downward, downward. Even though you had a slight push up here, you see it down here, the MACD, these lines still are diverged. You still see divergence. Now, when we get over here and get closer to going back up, now the green line, the 8 moving average, is crossing above the 21 moving average. Let's look down here at the MACD. The same things happened, but it happened here a bit before it happened here. This green line crossed above this purple line. All right, so this is going to give you a good indication of what may be ahead. And I love to use that indicator. I use that, the MACD, on all time frames, and it can really help you gauge the strength of a particular direction. All right, in the RSI, the relative strength index. Now, this is really good as well, and I use this on all of my time frames. I don't make decisions based off of any one indicator. Again, it's a collection, so I'm just keeping an eye on everything. All right, but the RSI, I'm looking to see, for one thing, is the stock overbought or oversold? Now, with this RSI line, then this is the RSI zone, from the green line up to the red dotted line. When it gets up here to the red line, and even higher at times, it'll be up here. That is when the actual stock is considered to be overbought. All right, so, and when it's up here, a lot of times we can anticipate a move to the downside because it's overbought. So we may look for puts, possibly. Not all the time, but it's something to look for when you see this RSI line very high up in the zone. So that means that the conditions are currently overbought. Now, when it comes down to the bottom of the zone, and then at times it'll also be lower than this green line, then we consider it to be oversold, and a move to the upside may be on the horizon. So the RSI is really good for making that determination, whether it's oversold or overbought, and as well as just the overall direction. So as you can see, we are pushing down on the RSI, and even at times you can draw a trend line. Start here and you go down this way. All right, so you can draw a trend line, and as you can see, it's headed down, and up here we're headed down. Even though we came down and back up, the RSI came down and back up, but this never came any higher than this previous mountain, I guess you can call it. This mountain top here, and then we had a valley, and then another peak, another mountain top here. So the overall strength was headed to the downside. So those are reasons that I always use the RSI, the MACD, and the moving averages, and VWAP. And if you are using Tradingview and you want to add anything, you'll just go up here to indicators and just type in whatever it is. So let's say VWAP, type in VWAP, there it is. You click on that and it'll add it to your chart. Same thing with the moving averages. You type in moving average, and I like to go exponential moving average. All right, exponential moving average, and we have that here. All right, so you click on that, it'll add it to your chart. And when it is added to the chart, let's go here, you can click on the cog and you can customize it. So the input, this right here, the length, these are the days you choose. So this is the 21. So I got 21 in here, and I
chose my color, and that's pretty much it. You want to customize anything that you added to your chart.
So we're back. Moving averages. They track the price trend of a stock over a period of time. All right, so in the last video, I talked about the 8, the 21, and the 200 moving average. So I'm using that as I scalp trade, as I day trade, as I'm jumping into a position, jumping out. The 8, the 21, and the 200 are the moving averages that I'm using each day, along with my VWAP. All right, as I stated, if a price is in an uptrend and it's above the 8 moving average, I'll continue to stay in that trade. Now, when it breaks that 8 moving average, and not just breaks, but closes below the moving average, I'm on the lookout. But if it closes, let's say it goes below and touches the 21 moving average, which is below the 8, and for example, if it touches that 21 but closes through the 21 as well, at that point, I'm out. I'm gonna take profit. All right, so just because it taps below the 8 moving average doesn't mean that I'm gonna get out of that trade yet. So I just wanted to make that clear, I wanted to highlight that. All right, so here we have the 8 moving average, 21, the 50, the 100, and the 200. And you can see here when it's good to use these. So again, the 8, the 21, I'm using on shorter time frames, but the 50 and the 200, the 50 and the 100, I'm using on longer time frames. The 200, I'm using that pretty much on all time frames. All right, and again, these numbers are representing the number of days that are being tracked previously. All right, the RSI, the Relative Strength Index. It is a momentum indicator that measures the speed and magnitude of a stock. It could also be used to determine if a stock is oversold or overbought. Okay. Once you add this to your chart, you will be able to select the settings cog, which is right down here, this purple arrow. Once you add it, you're going to be able to adjust the settings here. All right, when you do, this will pop up. You'll have inputs, style, and visibility. There's never a need to change the visibility ever. All right, so if you have yours pulled up, you can copy these settings right here. So for your RSI, this is what you need to put in. Everything you see right here, I want you to put in. RSI length 14, and so on and so forth. So just copy these settings. Okay. So that's under inputs over here on the left. On the right, this is style. And like I said before, you can change the color on the RSI, no problem. And yeah, whatever. I like mine's yellow, but whatever color you want, it's fine. And then down here at the bottom, we talked about overbought and oversold. And here, things are considered to be overbought. All right, because you see it's actually above this red dotted line. So it's overbought. Down here, this arrow, you see it's below this green dotted line. So it's below, right? It's below the main zone. So this is considered oversold. When you see this, you can look for price action to potentially go back to the upside. When you're over here, when things are overbought, you can assume that price action will continue, will start to go to the downside because it's overbought. All right, so these are my RSI settings right here. So you can copy these. All right. Next, we have the MACD. The MACD, it is an indicator that measures the relationship between two moving averages. With convergence, the current price trend could reverse, and with divergence, the price action could continue. However, none of this is actually just guaranteed. All right. Same thing here. Once you add your MACD, you'll be able to click on the settings cog to adjust your settings, and you'll have inputs and style. So on the left hand panel right here, we have inputs highlighted. You can copy these settings for your inputs. And on the right hand side, we have style selected, and you can copy these settings for your style on the MACD. Alright, and let's take a look down here as well. Convergence. Current price trend could reverse. As you see, this green line is above the purple line for the moment, but then things start to converge. So this green line starts to converge with this purple line, and then eventually crosses it. So it crosses down below this purple line here. And typically when it does this, the price action is going to turn bearish and start to head to the downside. And then these lines start to diverge. They start to go away from each other. Convergence, divergence. So right now, these lines are going further and further apart. That's divergence. Let's look down here. We see a good example of divergence. You see how far apart this purple line is from this green line right here. All in this area, right? But then the green line starts to cross back above the purple line. That means that the lines are converging again. All right? So the MACD is a good indicator to have up, as well as the RSI. All right? VWAP. All right. The VWAP is going to represent the price action during that day's trading session. All right. Now, as I talked about in the example in the video, just be mindful if you're in a position, if price action is starting to approach your VWAP line, just be mindful that things could bounce. So let's say this is VWAP. Let's say price action is up here. So your inputs, you got in here, you're making money as the price goes down. When it touches the VWAP line, it could bounce back up. And if it bounces back up, you're gonna start losing money. So it's gonna start digging into your profit, because you're making money as the price goes down when you buy puts. So when it touches VWAP, just consider closing some or not all of your position and taking profits. On the other hand, price action is down here and the VWAP is here now. So you're in for calls. So you're making money as the price action goes up. When it touches this VWAP line, you may want to close some or if not all of your position, because it could bounce back to the downside. So typically the VWAP does make that price action respond. All right. And the same goes for that 200 moving average, as I talked about. All right, so the VWAP, I'm using that mainly on my 5 minute. Okay, now 1 minute, 15 minute, 1 hour, 4 hour, I have it on, but daily I'm using the VWAP on the 5 minute chart. That's where it's really holding the most weight for me. Okay, but there's people who use it on other time frames. Personally, I like to use VWAP on the 5 minute. That's where I'm really paying attention to VWAP. All right. So, and then VWAP, if price action is above it, the sentiment is that the stock is bullish if it's above the VWAP. When the stock starts to trade below the VWAP, the sentiment is considered bearish.